John B says, I'm narrowing down 2 to 3 franchises I want to get into. My question for the experts is this. What is a better option for loans? A small business loan like an SBA loan, or taking a loan against my portfolio, aka a pledged asset line of credit? I thought about liquidating some stocks I owned to put more cash down on the loan, but I remember Robert and Austin talking about how they wouldn't want to lose out on growth of their investment opportunities and get hit with capital gains just to take on debt. Interest rates are about the same for both of these loans, maybe marginally higher for SBA loans, but does anyone have an opinion or real life learning to share about this? Robert, I'll let you go first.
Yeah, I love it, John B. Let's clarify just a few things with franchising. It's not all rainbows and unicorns, so make sure you select wisely. If you need any help, I have a great friend who's a franchise analyst in the country. He would really help guide you. You could do a free call with him if you already haven't. But secondarily, when it comes to the funding and the loans, yes, you can look at an SBA 7A loan, but keep in mind the interest rates on those are very high right now, and it kind of puts you in that spot where you're in this high interest debt situation to open this business. So I would say you could look at some other things. Maybe you look at doing a friends and family round. Maybe you do a hard money loan to get the money you need up front because it's going to be much less expensive than an SBA loan from an interest rate perspective. But also you could look at a platform like On Deck, see what they have to offer, because they're going to take into consideration your credit, your company credit, your history in the business and all of those things. So just make sure you really flush out all the options to find the best money you can find to do the franchise. Now, over the last 15 years, I've done very well in franchising, but I also have friends that have done very poorly in franchising because they chose poorly and they negotiated poorly. So make sure you have a professional helping you with site selection, lease negotiation, and most of all, the funding and how you get your money to get up and running. And make sure, my biggest pro tip for you or anyone listening getting into franchising, make sure you have enough operating capital once you do get open through the construction and into operations, because so many people operate with far too little capital and they find themselves in harm's way quickly. You want to give yourself a cushion of at least a year, if you can, to make sure that you give the business time to mature enough to create profits to build the bank account up.
So what you're saying is have expectations of the business to do well, but don't overestimate how much you'll make in the short term. And don't take on credit card debt to supplement what those future profits might look like. And now you find yourself in this weird bind living off of, credit cards to help the business grow. And is that what you're kind of saying?
Yeah. And what happens in a small business that's underfunded, and this happens every single day, I deal with it on a regular basis in my one-on-one calls, is so many people are underfunded. Then they max out the credit cards. Then they get a second mortgage on their home. And they do all of this. And what happens is you find yourself spending your time chasing money instead of building your business. And that is a double-edged sword that can ruin so many good businesses by being underfunded. So just try to do your best to understand you want to expect great things, but you want to be prepared for bad things because you never know what's going to happen. I remember opening a brand new restaurant that I was building of my own, and we were making it franchisable, and we opened up and it was gangbusters. We were doing over $40,000 a week, and I was like, I'm a rock star, I'm a hero, this is incredible for a 1,500 square foot restaurant. And then they closed the road for 18 months, and our customers had no access. The entire commercial side of the area where all of our lunch customers came from had no access to our restaurant, and it ruined us because we couldn't do anything about those outside conditions. So just be prepared for the worst and make sure that you are funded well enough to make it through the good and the bad times.
Now, John, my only perspective here is someone who hasn't ever taken out an SBA loan or hasn't ever taken out, margin or, what you call a pledged asset line of credit, which is the formal way of describing it there. M1 Finance has I think it's 6.5% interest rate on this pledged asset line. So for example, I've got about $500,000 of assets on the platform. I think I can borrow between 25 and 50% of that as a pledged asset line of credit, which means I could borrow up to $250,000 of debt against my assets on this platform at a 6.5% interest rate, right? So if that is a opportunity that you might have to sort of take on maybe a margin loan, and then you can use that debt at a lower 6.5%, 7.5% interest rate versus this 13, 14, 15% we're seeing from these 7A loans right now to go work about the franchise and get it up and running, that could be a good opportunity because one, the debt you're taking on is completely covered by your assets. So even if the business does terribly, you're not going to now go into bankruptcy with the SBA and these other different things. You just simply sell your assets. Maybe they've even appreciated by that time, hoping that doesn't happen, by the way. And so now you're still out, you're scot-free. There's nothing to worry about from bankruptcy perspective. But now too, you don't have to sell your stocks, man. Your stocks can continue to go up and to the right. They can continue to appreciate over a long period of time. You don't have to, worry about the capital gains taxes that come with it. So I'm cool. I'm leaning toward this sort of margin loan solution that you mentioned, John, especially with a platform like M1 Finance. But just be careful, know what you're getting yourself into, understand what margin calls mean. Go watch the Margin Call movie if you want. But we're rooting for you, John. This sounds like a really cool opportunity, and we hope it works out for you.